What is happening, good people? Hopefully you're here to have a beer with Tony Greer. I just cracked one myself. I had the first question, actually. We're going to get right to it. Trillion X coming in asking, what kind of beer did you bring? Asahi, Stella, Belgian, Trappist, or Chimay? My new motto, since Anheuser-Busch came out with the new cans with the insane people on them, I'm going with Peroni only. So that's what I'm drinking nowadays. And cheers to everyone that showed up today, especially if you have a cocktail also. Let's keep this in front of me. I got to be careful and follow the rules this time because I kind of punted that a little bit. The first question that came in was about uranium. And while I think that it is a lovely idea right now, I can think of 1,000 better places probably to put my money. And we're going to get back to that a little bit later. I just want to make sure that I get to a couple things here. Caleb Reese. Okay, I've got a Real Vision guy calling in. Any thoughts on the surprise Saudi cut? Great question. Here we go. Let's get involved. In your opinion, is it an FU to Biden admin, or are they actually forecasting weak demand for the rest of 2023? Well, we already saw the fist bump out at the curb at Riyadh, right? That kind of gave us the idea that Mohammed bin Salman was none too impressed with President Joe Biden or any of his antics. So it just came out, and factually in the news, I think this morning, that he was no longer interested in pleasing the United States. So there's a little shot to the jaw there. That is going to continue to happen by that, group that's breaking away and starting their own commodity exchanges and currencies. And you know who I'm talking about. I'm talking about Russia, China, Brazil now, Saudi Arabia, Syria. There's a number of other countries involved in that. So they're also a feisty group as well. So they are going to continue to flip Joe Biden the bird in that way. What do I think about the cut, though? Most importantly, it kind of counterbalances a couple of things. Yeah, and what it probably does is keep oil from sliding any further into the 60s, quite honestly. So, the 500,000 barrels from Saudi Arabia, the 1.6 million barrels a day in total from the OPEC Plus group, a lot of that is to counter, Russian sanctioned oil that has come off the market, things like that. So I think that it's going to be a net positive for oil. I'm actually really impressed by the price action, by the way. It came in, it opened up at, 79.75, $80 after the news, and really only traded to a low of $79, where it looks like there was a bid because it bounced off the price quite a bit. So it looks like people are still willing to either, one, get out at this price, or two, potentially add to their positions. The open interest in oil is kind of low but climbing, historically low but climbing a little bit with this move. So we'll see if that continues, and I think it can. There's probably a lot of firepower that can actually come into the energy markets, especially since everybody just got rinsed out on the downside when that range broke on the Silicon Valley Bank news in the first week of March. So it spent 2 weeks below the $70 range, came right back up above it. If the Saudis were smart, they might have thrown some chatter out there and given some funds a chance to get long, because then you've got like happy participants in the market. It looks like they were more interested in doing a Jamal Khashoggi job on the short positions out there, and really just go after him and not have anything else in between. So we'll see how we go forward, but I think we are going to continue to see, pressure like that keeps the oil price afloat. I'm sure that they see some kind of, economic weakness that seems like it's going to be happening here in the U.S. at some scale, with tons of layoffs all the time in the tape. So we'll see how it all pans out. So there's a lot to unpack. I don't want to spend the whole night on that one question, but I got us off to a good start there to cover the major points. Should I buy a thoroughbred? Yes, definitely, Jules Verne. I like the idea. Nothing to fear. Tony Greer is here. That is amazing. Okay, who else have we got here? What is my target on WTI? Well, just to go back right into this trade, because that brings up another good question. I mean, I don't really know what kind of target to have on WTI right now, especially after that headline. The fact that it's holding $81. We're up at the top of the range here. There's a big range top at 83. So my guess is that we're going to work all the shorts out of the positions here. We might have a couple of guys come in and get long, and then the price is going to pull back to something like, the mid to low 70s and then bounce again. So the way I approached this trade and this headline was that I made sales in almost everything across the board, selling refiners into new highs for the move, like Marathon Petroleum, trading out of the last of my oil position that I had. I mean, that was a get out of jail free card. So I took it. And I think that's the way you have to trade this nonlinear, chaotic market. I have in my mind that the curve is still minus 50 basis points, give or take, and 2's curve in bonds. And that means that there are some kind of snowballs that are going to get through the economic window. We just had a significant move lower in rates today. There was a 15 basis point slide after, I guess, factory orders and durable goods orders were the kind of straw that broke the economic camel's back this week. Yesterday, we saw ISM data kind of weak across the board. Then today, it came in at 10 o'clock. We had weaker factory orders, and the bond market just said, we'll have those. Yields went lower. We saw 2-year yields drop from 4 to 385, and that was a pretty significant move. Same amount of about 12 basis points lower in the 10-year as well. I think that move lends itself to one of Cuppy's trades now that I see his name going across the street. I think the builders might wake up on lower yields. So let's keep going. RS, FTGC Commodity Fund. I don't know that one. Indian equity market, Himanshu. With all due respect, my friend, there are so many opportunities in the United States equity market and in the global commodity markets that I have at my fingertips. I have not looked beyond any of those. I try to stay focused. I try not to have more than 6 or 7, maybe 8 positions on my pad at once. And I have no idea what's going on in Indian equities, but cheers to you guys that are navigating that market. What are we thinking about gold? Well, gold and silver. Oh, this is a good one. Daryl Densmore. I want to come back to the silver question. Daryl Densmore, are pot stocks dead? Oh, man. What is going on in the cannabis market is throwing the baby out with the bathwater and then some. And I can't say that the waterfall is going to end anytime soon because they are correlated to precisely nothing right now. It doesn't matter what market, what the S&P is doing, for the love of God. Cannabis stocks have been making a new low almost weekly, monthly, and quarterly for, like a couple of years now. And I would say at some point we're going to trade through their value level and they'll finally find a floor. But I think it might be hinging on the Safe Banking Act. And until the market gets a real appetite for them, like an actual hedge fund bid with, the idea that they're going to get better options in banking, if safe banking gets passed, maybe that makes them come alive. But right now the trend is down and I can't touch them with a 10-foot pole. We always joke around in my Slack channel that you can buy the entire sector for which you could buy a 3-pack of 1 1/2 inch rollable cones. So not doing great, the cannabis sector at all. Daryl, thank you for that great question. Trillion X, just next in line here. Wait. Kenneth Natova, Real Vision guy, thought on natural gas bottom forming. Man, he who picked bottoms come out with sticky finger. Be very careful picking a bottom in natural gas of all commodities. You can try it once or twice, but you have to keep in mind that just because it's a $2 item doesn't mean that it can't get halved again. So that's a way that you have to approach that position. Right now, there seems like there's plenty of natural gas. It seems like there could be more on the way. And if the supply side keeps feeding the market like it is now, and there's no hiccups in Mother Nature, I ain't touching that trade with a 10-foot pole. In fact, I've already made an extremely painful donation to trying to pick a bottom there. So my money is done in the natural gas trade. You can continue to hunt that one at your leisure and at your peril. Is it time for contrarian UNG trade, Jake Weaver? I just went through that, and that one tends to get expensive. But yeah, eventually, I've seen natural gas go from 2 to 10 about 5-6 times in my life. I'm sure it is not the last time. Eventually there'll be a Mother Nature situation that soaks up all the supplies, and tightens the spreads, and it becomes a positive carry trade, and everybody piles into it, and the positive flywheel goes on for months, and natural gas will go from 2 to 10 again. Via what price? I have no idea. Let's keep rolling. Let's see what the next thing is. Carbon credits, Luis Martins, Real Vision. Oh man, this is a tricky market. I kind of took my eye off of that ball. They rallied sharply for a long time, started consolidating, and I couldn't tell whether they were really like attached to, whether they were correlated to what's going on in the oil markets, what's going on in the global economies, or what was really driving them. So I kind of stepped away from them and haven't followed them closely. I still have a feeling that it is sort of one of those built to rally vehicles where, as the green movement continues to get legs in the corporate community and everyone signs up for it, there will be more and more people that have to, hedge their carbon footprint with carbon credits. And so there'll be a constant bid to it until there's not. And I'm not really sure how to negotiate that. I have a much better edge in a couple of other markets, I feel. Let's see. Paul English overview between a correlation of oil and nat gas. If there is, I don't see one. Obviously there's going to be some correlations between the amount of drills that go in the ground and who's drilling from what properties, et cetera, et cetera. But in terms of trading them, you have to treat them like apples and oranges, 100%. Let me just keep ripping down here. Richard Dowdell, and then I'm going to scroll backwards. Thoughts on copper, silver ETFs? Yes. Those have been disappointing to everybody for a long time. Since we had that rally in the beginning of the year in copper, even with a weaker dollar, the price just hasn't had that like exciting giddy up feeling that it's had before when it's going to do something special, like when it was on its way to 11K. There's still the story where inventories are super low, historically low, going up against swimming upstream against the fact that we're pivoting toward a lot of electronic vehicles and electronic battery power, which are going to need massive, massive amounts of copper, combined with the idea that the global economy is neither, put it this way, China is 50% of copper consumption. So unless their economy is going to start hoofing, it's going to be tough for copper to get, really moving anywhere. And I feel like you can see the wish-wash of funds getting in and out lately and getting washed around a little bit as it blasts through moving averages, and you see weird kinds of volume moves. So I think that it's a dangerous place to play. And so is silver, by the way. Silver is another commodity that's popular in my chat, and guys love to be bullish and long silver, and like it is literally a rich man's casino, and you can play in that casino. You're absolutely welcome to. I've been in that casino up to my neck, and I've been in some unpleasant positions in that casino while running a silver book on a trading desk, and I've just had so many personal unpleasant experiences with it that I really don't trade it. I kind of sit and spectate, and I do have a smug ass chuckle when it goes up a nickel for 3 weeks in a row and then goes down $1 in one day, and everybody gets washed out because nobody sold anything. So, I think that's how I'll continue to look at silver, is stay away. Copper, I'm in the weeds looking for a catalyst, an opportunity, performance, exciting price action, any of the things that draw me into big commodity trades. So let's keep answering questions. Are you increasing your cash holdings? Dave Stiles, Real Vision Finance. This is a really good question. I like this question because it's a common denominator. A cash holdings thing is a common denominator. I had a client dinner in New York City, and we had a great group of guys. And what was amazing was that at different times, everybody told stories about sort of they and people in their business community all taking advantage of all interest rates over 4% and socking wads of money away for a long time at that rate. A lot of people have been beat up in the markets, and a lot of people, maybe don't have strong views about where to put them right now, where to put their money right now, because things are really dangerous, volatile, and nonlinear. So I find it interesting that everybody is increasing their cash holdings. I know I have, and I thought it was funny that every single one of the people at my dinner had, and they also had, like I said, anecdotal professional stories where that was the way the train was moving, people that are in wealth management and at private banks and things like that. So that was a really, really interesting thing. What it leads me to believe is that there's a lot of cash on the sidelines, right, to buy stocks. Uh, Gordon Pearson. Yes, what a great question, Gordon. Marathon Petroleum. This one is priceless because I've lived this 1,000 times in this rally. Gordon Pearson, any specific reason why Marathon Petroleum was slammed today compared to its peers? And I love that because I used to wonder myself when I was a rookie at refinery trading in the markets. And this is so classic. On a day like today, you'll see Marathon Petroleum have it's got to be a major move. Yeah, yeah. A 3.5 sigma, 7% move lower today, right? This is the greatest lesson in the world. I mean, we could do a keg of beer with Tony Greer on this question right here, Gordon. So Marathon Petroleum, the reason that it had that slide today is because yesterday it opened up. Let me just get this chart in front of me because this is poetic justice. I was making sales yesterday, and I'm not tooting my horn. I was publicly making sales. I'm on Twitter, timestamp. Josh Young asked me, "What are you doing on the Saudi news, like on Twitter?" And I was like, "I'm selling stuff right into the energy rally." So Marathon Petroleum is something that I have had on my view matrix that I've been bullish. That's one of the stocks that I bought in the lockdown puke and out of the lockdown puke. And I have Marathon Petroleum shares ready to go for my grandkids when they're born. And the move yesterday was simply Marathon Petroleum has been trading beautifully because there's still portfolio managers that are adding this sucker to their portfolio. Why? Because the crack spread continues to hang in the 30 to 40 range on really positive gasoline demand, right? So this is one of the reasons why in the year like last year, when the S&P is down 15%, stocks like Marathon are up 80% on the year. And it's because the functionality of their business model is ripping on all cylinders, that being the crack spread between $30 and $40, right? So that's 3 or 4x their profit margin. The investment community that wants to play this from the long side understands that and is, still getting into the position size that they would like to be in for Marathon Petroleum and Valero and Delek and some of the other big refiners that are operating now at these much higher margins. So the stock's been on a run. It opened at an all-time high yesterday, right? That is traditionally used to be for me something that I would just be high-fiving about. And at this stage of the game, I'm smart enough to know that if I'm high-fiving with one hand, that I'm also making sales with the other hand, because a stock that's gapping open higher, while oil is just trading up to the top of its range with massive resistance ahead, is still a sale. And you might be a portfolio manager that got into that idea yesterday saying, "Oh yeah, this was a big, outside reversal potential here. Let's go make sales into it," and not have gotten enough off of the sales that you wanted to make in one session. So you came in today and said, "Yeah, that was the high for a little while, 138 in Marathon Petroleum, near 140. Come in today somewhere, sell it down to 130. I don't care. Take a piece off the books." And next thing you know, that's everybody's idea, and it's all the elephants through the keyhole. And down 7%. Who gives a shit when you're selling the stock at 130? 129, 130, that, you haven't seen that level, really trading. We got there in a little bit in the beginning of March, but that's been the high. So now what we're doing is distributing stock. We are feeding the new buyers, and we're, up at the highs yesterday, where I'm proud to be on the tape to say, yeah, that's a portfolio sale right there. You can buy it back at cheaper levels. And that's what happens in Marathon Petroleum. Market of securities. There are no headlines related to Marathon Petroleum today. There are people all over the place, but not here on Real Vision or YouTube, wondering what the hell happened to their Marathon Petroleum position. So, going back up the chain here, Jonathan Ventura, I've seen physical gold go up when the long end of the bond market yields drop. Okay, I got that. With higher for longer Fed funds rates above 5%, gold will continue to rise due to inflationary uncertainty. Put it this way, as long as there are moves lower in yields, gold is going to continue to rally. That is what has been the correlation. It has somewhat been correlated with a weaker dollar, but I think broadly speaking, it's fair to say that lower yields have been favorable for gold. And it looks like we have to get a test of that. What top are we looking at? It was around 2,200 or so. Just above where we are is that range top that it's got to bust out of. And it's certainly on a beeline too. That level is about 2070. So we're about $50 away from a big breakout level in gold. It feels like if you're betting on yields going lower, which I am, and the people on the Navigator with me are, that's the way you're expecting gold to go straight up. So we got to test that level. Mark Brandel on TLT, making it look close to buyable. Does it go on a run here? The Treasury market can rally. Yeah, after the reversal that we saw from March 8th to March 13th, where 2-year yields traded from 5.06% down to 4% in 3 sessions, that was wrapped around a weekend. Remember, that was from when Powell spoke in front of Congress saying that the terminal high end would be higher than investors thought in terms of fighting inflation. 2-year yields ticked 506, reversed to 4% by the Monday morning after the Silicon Valley Bank blow up on Thursday, which was the day after Powell. So when you see a reversal like that, you kind of know that that's the end of that move for a while. You would, it kind of coincides with what looks like the change in rate cycles. So yeah, now you've got to bet on yields going lower. You've got to bet on Fed's cutting rates, around the turn here, and make sure that your portfolio is positioned for all the things that are attributed to that, like making sure that you get on the technology train this time, and making sure that possibly being in the long bond trade, this looks like it's got room to run. So I do agree that that is a good spot. DK down 12% on the month. There's a buyer in default. Let me take a look at this one. Hang on. Delic has lagged. It had that episode a while back that knocked it below its moving averages. Yeah. Put it this way. Delic is not the one to chase from the bull side right now. I mean, you can try to pick a spot technically and lean on that. But, when you look at how that's underperforming, Marathon and Valero, which are, the trades that I hunt to keep it very simple. The trades that I hunt look like the Valero and the Marathon Petroleum stock, where over a long period of time, they go from the lower left corner of the screen to the upper right corner of the screen. And if you're paying attention to everything that's going on in the markets on a daily, weekly, monthly, quarterly, and annual basis, you will find things like that to trade. The reason that you like to trade those things is because they give you a good probability, a chance of success when, looking to upsize your long position into that rally, looking for a continuation of it, or looking for it to hold a dip. Those are that you'll learn over the years. You're paying close attention to names and trends like that are the ones that you make your year in. So I try not to take my eye off of the ball too much in the refiner stocks right now. Joe Amatuli, looking at any tech, any AI? Great question. No, I am petrified of all of it. I'm not investing in it. I have a half an eyeball on, the theme as an investment. I was grateful to hear Elon Musk come out and say, let's put a hold on this. Just because I don't like where it's going, especially, when you consider that the first chat GPT that came out, was wildly biased already, and you're like, okay, is this going to be another con job too? And, a lot of it might be, I'm sure most of it isn't. And I know that once the snowball gets rolling with AI, that I don't think you stop it. So I'm not sure that we should let it go unchecked. So that's the only view I have on. I am not educated in the space. Um, I don't feel like I have much of an edge there. It doesn't feel like funds. There was something fun about investing in Apple, when you could put your record collection on your phone, on your, device. And, something fun about investing in hardware companies and software companies, and investing in, finding the trends in stocks like Adobe and things like that, and jumping onto those for periods of time. But there's no fun for me in investing in AI. And it's not even like one of those things that's a hedge, right? Because it's not like, oh, I made money on the hedge, so I'll make it out of this AI thing alive. And it's like, no, you won't either way, with or without all the money you have. So I think that that's kind of the way I look at it. And it may be completely not the right way of looking at it. I have no idea. Let's see what else we've got here. Does anybody have any general interest questions? Is anybody doing anything fun? Does anybody want to talk about music? I think we covered a lot of questions. Oh boy, here's a good one. Keto RX. Do I keep my life savings in self-employed 401k with the dollar dying, or cash in for gold, silver, Bitcoin? Wow. I mean, that's a heavy question right there. I mean, I'm not your wealth manager, Keto RX, so I apologize. Guys, I really do, about that. Um, I think that you should diversify, if anything, so that you can sleep at night. I mean, I've sort of only diversified a little bit to, a physical metal portfolio that, hopefully I can hand off for my deathbed to my kids one day, without needing it. But that's kind of just in case but to me, that's a monetary hedge, more than a trading position. And while we do have the trading position on now on the Navigator, simply drawn there by performance, um, I think that if you're talking about your life savings, that, if you have a little bit across the board and in percentages that you're comfortable with, jot it down on a legal pad what you'd be comfortable with, given, prices, volatility, et cetera, et cetera. But I know that seemingly over time, a larger allocation of gold always would have benefited me more. So I kind of like to look for, steep dips and buy, and I mean, just like everybody else, but meaning buy physical and add that to the portfolio. So that's how I look at gold right now, and sort of as it relates to my sort of longer term life savings and things. So um, I think that a 401k is important, because you have to have, some allocation of bonds and equities. Jared Dillian is probably a great resource for that, as he is a master of personal investments and has helped me with a lot of things that I would have never had any clue about. So that's just a plug for him there, because he's really useful in that arena. And I think he's writing a book on something like that. I don't know. Okay. How many beers will you drink? Neil Moy, great question. Let's try to work on one. If you're going to do the beer theme, you've got to drink the beer, for the love of God. Um, let's see if there are any new questions on here coming in. Your favorite band from each decade of the 70s, 80s, and 90s. Now we're talking about shit. Let's go really quickly, though. Can you play? Oh, first, great question. Like, can you play Eruption? I'm rusty at it, but if you give me some time, I could probably get three-quarters of it down and fool everybody. Um, your favorite band from each decade of the 70s, 80s, and 90s. Wow, I lose track. I have to say, well, I'll tell you right now, my favorite band from the 70s is going to have to be The Who, because that's who I paid the most attention to as a single digit kid. I had my older cousins that would play the Tommy album for me and tell me the story about the deaf, dumb, and blind kid that was a pinball wizard. And man, did that freak me out. twist me around and have me wake up in the middle of the night thinking about some of the scenes in that movie. So yeah, definitely the Who was a huge influence on me in the 70s. In the 80s, definitely that was Van Halen time. I mean, I was full ass over tea kettle in love with Eddie Van Halen as a young teen, and just absolutely floored by his guitar. I got to see him at a young age. That my dad got me tickets to at Nassau Coliseum and at Madison Square Garden. Um, and I was never so blown away by anything. I've still never been blown away by anything like the original Van Halen shows that I got to see, of which there were five with David Lee Roth that I got to see as a kid. Definitely. So my favorite band of the '90s by that time, it became the Grateful Dead, without question. In college, I always got to know the Grateful Dead. When I went to college, I graduated in '90, and it was after I got out of college and I guess spent some more time going to shows and registering more and more shows with what I really liked. And I got taken to the 10th row at Madison Square Garden. Um, in front of Jerry Garcia by a currency broker um, that was still a friend of mine named Bobby Nowicki. And he stuffed my face full of mushrooms, and we watched the entire Dead show from there. And I have never seen anything like it to this day. And so that is why, you continue to go back and see. I got a lot of shows in with Jerry in the early '90s before he died. So that was my band. So that would be the Who, and then Van Halen, and then Grateful Dead. So really typical stuff, I guess. All right, let's get into some other questions, although that was the best part. Any chance we can trade out Elizabeth Warren? It's amazing. The Who is great. Yep, horrible Who. I understand. Moon the Loon, Keith Moon, man. I was sad as hell the day he died. That hit me like a kick in the nuts. Uh, Austin Tacker, top best five. I believe it. I'm dying to get there. Austin. Oh, top best place to see a concert. Oh, me, top five. It's got to be. I mean, Red Rocks is really mind blowing. I've never seen anything like that, physically, structure wise. That's a work of of art. I just got to see three Widespread Panic shows there in the late '90s, and that stands out like anything else. But you got to throw down. I saw Fish at Hollywood Bowl, and I thought that was incredible. Really, really special spot. Um, the Garden is like my favorite place to go see anybody. I get like more excited to see people at the Garden because I see a lot of musicians show up at the Garden like they never showed up anywhere before. So that's definitely up there for me. The Beacon Theater is a special place for me. Super small, super boutiquey and beautiful, and what a vibe in there, man. For Panic shows and Tedeschi Trucks Band and stuff like that, or the Almonds. Um, and I'm sure there are many, many more. David Lee Roth, Dee Gardner definitely was the best front man of all time. Have you heard of Greta Van Fleet? Excellent band. Excellent band. Absolutely dig them. Saw the Dead a few times. Pueblo Beef Com. I like that. Hey, Tony bought the Marley turntable at the Senior Beer Cast. Love it. The Bluetooth speaker. Yeah, man, they're pretty good. It's a good setup. I like this setup myself. I play it quite a bit. IPA or lager, Manas Agarwal. Strictly lager guy. After post COVID, I can't drink IPA. It all tastes like soap. And it's like COVID. Before COVID, I would literally have problems battling my weight because if I went out for beers, I drink like 3 or 4 IPAs, and that's like 7 days worth of calories. And so I'm now on this side of COVID, since having had it, it tastes like soap to me. So I'm back to all non-Anheuser-Busch lager. I think its dollar starts its descent down. Wait, let me just make sure I didn't miss any. Yeah, I think the dollar starts its descent down, even if just. Oh yeah, I do. I don't think it's just on brick sentiment. I think it's on U.S. rates going lower. The dollar has that phenomenon where as rates are going up, everybody is piling in to enjoy that risk-free treasury bond rate of we saw it up as 4% and change. On the way out is unfortunately going to be the reverse of that operation. So yields lower, people want out, and that comes out of the dollar. So it's selling dollars as well. I think that trend is sturdy. The reason I have the most confidence in it being sturdy is because there are two central banks at the top that kind of threw their mark down in the sand. And then we had sentiment and technicals crash down behind it. Really, really convincing stuff, though. Like, not the kind of stuff that looks like it can turn around anytime soon. I know that it can, and I'm not a terminal dollar bear. I'm not a non reserve guy. I've heard that argument 1,000 times. I agree with Brent Donnelly, who made some great arguments on. I didn't even realize how often the de-dollarization thing comes up. And when you hear it after being in the business for this long, you're like, all right, I'll think about it. Like, it seems like it's something, right? And what's different this time? And, when you look at the, reserves that trade around the world, I mean, it's like 60% plus are dollars, and you can't even make a dent in that wave. I don't care how many commodity markets you start. If you're trading a small amount of currencies, without the massive flows, then you're never going to be a reserve currency yourself. So we'll see how that plays out. But I'm just bearish. Technically, I think the price can go down. I don't think that it's going away or anything like that. So cheers, Manas Agarwal. IR Impossible. I think I see Tools of Titans in the background. Yeah, IR Impossible. Man, put it this way. I skimmed through a lot of that book, Tim Ferriss, and I got frustrated with him on, like, I just felt like if you want to help people, help them by not flogging yourself with a 4,000-page book that is way too much for anybody to go through. Now, not to say that it's not valuable, but I didn't go through the whole thing. I treated it like kind of a textbook and pigeonhole. Excuse me, wrong metaphor. Cherry picked things that I wanted to read about and really found them insightful and enjoyable. But the same thing, that is a 4-hour movie that could have been 2. Let's see. I like that you can see that what's in my background there. I hope there's nothing incriminating. No, I'm just kidding. Van Halen rocks, SS, they do still. Thoughts on the future of the petrodollar? Yeah, we just kind of went through that retrospect. I don't think it's may not go anywhere. It probably, it may lend a weakish tone for quite a while. It may cause people to sell it. It may cause the amount of transactions that take place in dollars go down a little bit, but I don't think that you're going to see these smaller currencies in the immediate term anyway break in to have an effect in anything that's going to affect my day-to-day trading, if that's fair to say. That's really an important discriminating line for me. How will the EIA adjustments be on the inventories tomorrow? The EIA adjustments, I don't know, man. You take the numbers on face value, and then you look at the reaction more importantly, and you see how people are positioned, and you throw that into the pile with everything else. You can't live and die by those numbers. Scotch or strictly beer? By Caleb Reese, great question. Do enjoy a couple of different scotches. I like Johnny Walker. I'm not a fancy scotch guy, but I do like Johnny Walker Black on the rocks as a holiday drink. That stuff makes me fat, so I try not to drink too much of it. It also makes me pretty wasted, so I don't drink it that often. And that's it, though. I do like to go out, and that's kind of a festive thing with me when I'm dressed up and drinking out of a glass like an adult. I don't mind a nice scotch, sure. Doug Morley, what does Tony do to blow off stress? Man, I keep moving. I walk my dog a lot around on the beach, so it's not just like kind of soft walk. I mean, go 2 miles or so in the sand with your dog, chase him around a little bit, and you've got a good workout there. I spend a lot of time in the summer on my bike and in the water and playing hoops out on the court on the side of my house here, and man, there's a lot of stuff going on. So it's usually just staying in motion. Playing my guitar also is something that I really love doing. Usually that's at night, and one of my favorite analog things to do. And that's it. Daryl Densmore, first concert, Daryl Densmore, Real Vision Finance. Proud to say that was Barry Manilow. that my mom took me to, and it was definitely in she's definitely in the 70s, probably by the time I was 11 or 12, because we were with my cousin. So yeah, that had to be like 78, 79, and Barry Manilow's heyday at Nassau Coliseum. And I'll say that at that age, like I loved it. I was like amazed at, like, for totally taken by even that type of music, and just seeing the first person live and getting some scale. um, I got addicted to that feeling pretty quick, and continued to go track down everybody else that I like to see. Favorite concert, I was just thinking about it, and all right. So I'm on a little bit. I was going back over how much I liked Fare Thee Well at Soldier Field in Chicago, just in terms of how, like, meaningful that was to be there for it. Um, because obviously this came out in a conversation, and when I think about things that I'm really glad I got to, it turns out that it's things like that. And so I'm trying to keep that in mind and make sure that I get to, some of the historic stuff, and paying closer attention to kind of things like, I like traveling to shows. Those are usually usually when you have your best experience, because you're like, it's like a destination wedding, right? It like takes people out of their atmosphere and makes them focus on the music, the party, the meal, the recovery, and getting home, and so it's got a beginning and an end to it. And those are the best storylines for me. Jonathan Ventura question: what do you think of Martin Armstrong economics, Socrates' prediction of international war? Wow. Sounds highly probable more and more every day it goes by, doesn't it? Manilow, pure gold, Pueblo beef com, right? Yeah, I was 11 in the 70s, absolutely. um yeah, freakish youth. I've gotten that comment before. One of the guys I worked with, a younger guy, said you have absolutely freakish youth qualities, and you should use that to your advantage one day. So if I ever come up with a good reason how, I will. Can you play guitar for this one time, or show us a tape of you playing? Oh yeah, I can come up with something like that. No, I'm not going to go grab my guitar now. I don't feel like it. I'm still a chord banger and a total for fun hacker player, and I clam up in front of any kind of crowd, camera, or anything. Like, I have to be playing alone so I can take a video of myself, and I eventually will do that and just post it up somewhere, because I can play some stuff that sounds really like the original, and I have fun with that. But literally, if I have to, I had to do, like, for example, like, I played a song with my cousin for my sister-in-law's wedding years ago at their wedding party, at the one of their wedding parties, and I practiced it. It's like 5 or 6 chords. It's a Van Morrison song. Couldn't have been easier. Into the Mystic. I mean, literally like a third grade level guitar song, and got to the thing and literally totally blanked on how to play it, and had to, like, go back to my source and look up each chord as to how I was going to play this into that, and like had to refresh myself because I got so nervous about playing in front of it. And it was a room full of family. It was like 50 family members and friends that I knew. So that's how not fit for stage I am on the guitar, but I am comfortable and will put something together at one point. My favorite to pick up is my double D, is definitely my Gibson Les Paul custom 2001, total hot rod of a guitar. I have my Marshall amp is actually on the fritz right now, but it sounds amazing through anything, and even better through headphones, through a PV Blazer that I played, that you plug your headphones right into, and that's cool because you can just hear it yourself, and you don't have to, blast it around the house. But I did absolutely love, when last time I was in Nashville, I played an unbelievable, like, 1950s, um, what is it, throwback, carbon copy of those Gibson guitars, Gibson Les Paul. And it was literally like, you shake picking the thing up because it's like a $15,000 item. It's got, the Murphy Lab scratches on it so that it looks real and everything like that. And you plug that some bitch into a Marshall stack, and man, you are instantly slash. Like, it is unbelievable how good it sounds and how powerful that is. So we're going to do more guitar stuff. I love that you guys are interested. Back to commodities. Do you follow any Royal outfits? No. What advice would you give to young people who might feel like they missed their chance to catapult wealth, not having assets going into 21? Well, that's totally fair. And man, that's a tough one. You can train yourself how to take risk and be good at risk. And over time, you'll see how trades look bigger in front of you. And then you can, put some money behind and risk some money on things, right? There's ways to lever that, and there's ways to look at that. But I think that that's going to be the way to go for the next generation, right? I mean, you had a chance to get on, not you, me, everybody that trades anything had a chance to jump on that Bitcoin rally, from 10K to 80K, and that went on for a year and a half, and could have jumped in at any time in size and made money. And, that was a great example of like the trading game taking place in real life. We're like, here's a ticker symbol. Everybody go ahead, go after it. Let's see what happens. And obviously for whatever reasons, right or wrong, everybody came after it and it had its bubble moment. But that was really cool to at least see that, I saw guys that, had just gotten out of college become millionaires on that move. And I got a feeling that that is kind of a way, the sign of things to come is that, you're going to have to figure out how to be sitting in a chair, paying close attention when AMC goes berserk, and be able to trade something like that to figure it out. Or you can keep stacking your chips in a much slower fashion, and do the Felix Zulauf type of trades and invest in salmon eateries and things like that. Osglitch, go for a coffee instead. I like Steve Foot, Real Vision. Do you maintain regular trading hours? That's a good question. Because no, I do have a regular schedule. And I don't really, I mean, there are times, going into weekends when I have a bigger position that needs to be managed and needs more attention. But I'm usually, as long as I'm around on opens and closes, most of the time, or like pretty much every day opens and closes. And then, you know, sitting in front of the screens, a third or half of the week, understanding price action is good, but I feel like stepping away from them has been beneficial for me in terms of just letting things breathe and think things out and think about things where things should be in your own head. When you come back to the screens or when you look at the screens, the next Monday morning and have things jump out at you that are different than your view, and you can only get to a point like that when you spend time away from the screens and not looking at them and away from the markets. It's got to be something that, happens kind of a conversation you have with yourself organically. And then you can weed out what your gut is really wrestling with in trading conversations. I took a break from Joe Rogan to listen to Tony rant live. That is amazing. There is quite a rant going on here, isn't there? Books on how to learn technical analysis, Lasse Sakara. Books on technical analysis. Murphy's Technical Analysis is the only one I ever looked at. So you can get anything out of there. Really simple, great book. D. Gardner, I like that idea. Make a video and put it in the Navigator. I have to do that. I should do that. I'm so camera shy when it comes to the guitar, and like crowd shy and paranoid, and it's terrible. But I will put something together because what I'm going to do? I'm going to sneak a recording of myself, because if I don't know that I'm recording myself, it'll go fine. But as soon as I hit the record button, I will start hacking notes up left and right. I know it. Do I ever go against your gut? Man, that's a great trading question. Mark Wells. Oh, man. Do you ever go against your gut? Let me think about that. No, I don't think I go against my gut. I think that it's important for you to not play mental tricks on yourself, right? That's like a double negative going against your gut, right? Your gut is the thing that you got to rely on that tells you, no, you got to get into this, right? Like the point of sale moment is your gut. Or no, you better get out of this before it gets worse, right? The ejector seat moment happens from your gut. Like, no, I got to be out, right? Because if it's happening from your nervous system, then it's too late already. Then you already lost, right? If it's your nervous system forcing you out of something, then you're cooked already, and I can't help you there. Your gut is what gets you out of something before you fry, and your gut is what takes something from a pile of money to a position in a security. That's a reasonable size position. So the gut is not something that you want to fade and have a mechanism where you say, oh, my gut says buy this, and then I just say nah, right? Then I'll never know what to do. You spend your whole life trying to develop a set of clear signals and mechanisms and things that take the emotion out of trading and make it really binary and simplify it as much as you can. And so using your gut to your advantage is something you have to have on your side. So no, don't play tricks on your gut. That's a really great question though, Mark Wells. Um, Outstanding. Manas Agarwal from India. How do you manage to keep emotions out when the trade isn't exactly going your way? Count the money is gone. Write the check. Write it mentally, whatever you got to do. Write the number down on a piece of paper, how much money you lost on that trade. That's the way to make it happen, right? That's the way to say the emotion can't be there, right? It's got to be this risk reward on this trade. I'm risking 1 to make 4. I'm risking 2 to make 5. And I can do that within the limits of my account and within the limits of leverage and within the limits of sanity and risk management principles. And that's what we're trying to do. So if you do that and allow emotions to constantly get involved, you're going to fry yourself before, that's, like I said, your nervous system taking over. And when the nervous system takes over, you're already done. So managing the emotions is sort of, learning actually to anticipate markets and make decisions based on, the stars lining up in your brain and having, the all important conversation with yourself, right? Like kind of how am I going to feel if I stay in this slash or get out of this, like how am I going to feel? How am I going to feel if I miss this? Right? That's a good way to get yourself into a trade is ask yourself how you're going to feel if you miss it. Will you live with yourself if you miss that one? So let's see, what do we got here? Commercial real estate, I have no idea. I stay in my lanes, Travis Haynes. You see what I did there? There's a serious systemic problem there, and it is most likely be the catalyst for the Fed to pivot. And Travis, let me tell you something. If you and I, unless you're a commercial real estate expert, if you and I have heard all about the commercial real estate problem that the world is sucking wind on, I'm going to guess that in 6 months from now, we probably won't be hearing about it so much again, and it'll probably crawl back under the rock that it came from, and it probably won't, cause any systemic damage to the markets until it does one day. I understand, but my point is that we have been hearing about this for years and these waves in and out. And so I heard, I'm sure that the financing is dire, and I'm sure that it looks terrible. And I'm sure that the Fed will point their bazooka at that at one day too, and sop up whatever mess it blows out onto the street, and we'll figure it out from there. CMT technician, does it have respect in the industry? Jay Michael, good question. I respect people with a CMT. You had to put your study cap on and get through a set of standardized tests to get one. So I do credit those people, even with, more knowledge of technicals than I have, without a doubt. Do I trust their system more than I trust my system? No. Would I listen to them over my decision? No. But I do think that they're trained very well to do that kind of job technically. So I do respect that, and I think it's probably worth getting, maybe if it's especially for guys that don't have the years and years of experience on a trading desk or aren't going to get that, seeing institutional flows go by, your whole career, and understanding what drives those, and what makes them sort of land on the desk and things like that. So I guess there's a lot to think about there, but I'm saying, if you can't get that type of experience, then, getting a CMT or some other license, like standardized license, that sets you apart from your peers a little bit at a higher educational level. And I think it's great. Absolutely. Yes, summer spike coming Jordan D Juice, I'm feeling you, man. I'm feeling you. Well, I think we're getting toward the end here. Unless anybody has any more questions, there is a oh, here we go. There's another couple questions. Yeah, I do think there's a summer gas spike coming. You know, Jordan, that depends on if Mother Nature cooperates with hotter than normal weather. Because other than that, there's plenty of supply around here. I'm sure Europe is well stocked after that fiasco last winter. So I think so. Will commodities follow the 2-year note down? Could do, could do. That's the way the trend is going. You know, deflationary, weaker commodity prices. The one thing that's different this time is that there is a vicious attack on supply, right? You know, Joe Biden is going to Saudi Arabia to ask for more production. He's not allowing the U.S. to pump any more barrels. You know, the whole thing about canceling the leases and then opening a lease in Alaska. You know, the U.S. energy policy is a shit show right now. So we'll see what happens. What is the best Market Wizards book? The first one by Jack Schwager is, I read both of them. The first one was better and awesome. I think you can't miss that. Yeah, smash the like button, gang. Smash the like button. Nikos is my man, always in my corner. I respect that, Nikos. That's absolutely awesome. Yeah, but we're going to close it up here. I'm going to go have some dinner and finish off the rest of the 6-pack, which I have on ice right here, ready to go. And if there are no one, Travis Haynes, cheers, mate. Jay Michael, cheers. Tyler Jackson. How do you decide? All right, last question. Tyler Jackson, how do you decide if you should average down old positions or just open new ones? Average down old positions is trading the same security. Opening new ones is trading a different security, right? So one is a different trade and they're totally different trades. To me, one, you're already in a trade doing badly, looking to play offense, not a particularly great move. And opening a new one is a brand new world, right? A first dollar into a security. There's a lot to talk about there. You would like the Navigator, my man, Tyler Jackson. Thank you, Manas from India, for tuning in. God bless, my friend. You guys are absolutely awesome. Steve Ligore, great. Joe, I appreciate you for tuning in, and everybody else that tuned in. Cheers. We're going to wrap. Oh, my dog just came in. Beckham knows that that's the end of Real Vision Happy Hour, and that it's time for him to eat. So we're going to go right now. Cheers, everyone. Thank you for the great questions. You can find me at TG Macro on Twitter. You can find me at tgmacro.com online. And you can DM me on Twitter and I'll try to respond accordingly. But thank you very much for tuning in. Thank you, Real Vision, for hosting a great happy hour. That was delicious. And let me know what else I can do to help people figure out these utterly complex and technically difficult markets.